I'm Charlotte McLeod with investingnews.com, and here today with me is Jeff Clark, editor of Paydirt Prospector. Thank you so much for joining me. Great to have you on once again.
It's great to be back with you, Charlotte. Thanks.
Really good to be catching up with you. I checked back, and our last conversation was all the way back in January. So certainly a lot has happened in the gold and silver markets since then. If we look at just what gold has been doing, it's reached all-time highs this year. And I wondered if we could start by talking about the main drivers behind that price rise.
Well, if you look back at the calendar, gold ignited on leap year day, February 29th of this year. And that's because the day before the Fed came out and said, well, we may end up lowering rates 3 or 4 times this year. And the market reacted to that, and all of a sudden gold was off to the races. And it jumped so high that all of a sudden you had some short covering that needed to happen then as well. So you had short covering, which means they're buying. And then you had momentum chasers and traders jumping all in. So that was a pretty good spike. It took us all the way up to about 2,400. It's since pulled back. But I think that's what kind of started all of this. And of course, we have the Fed to look forward to and what they might do in terms of when they lower rates. But I think that's the big news for the first half of 2024.
Yeah, and okay, speaking about the Fed and the influence that it's had on gold so far. So before gold started to move, I was hearing for quite some time from many people that we really needed the Fed to start cutting before gold took off. And of course, we've seen that it didn't actually need that. And we still have things like the stock market continues to be strong, which, we're also hearing, well, that needs to turn around and then that will help boost the gold price. So what do you make of that? And are there other things that we should be considering now in this environment when it comes to gold?
That's a great question, actually, because believe it or not, most people don't know this, even in the gold community, but the gold price has doubled since 2019. It's doubled. And yet, what do we have in that time period as well? No recession. We have we had a recession in 2020, but we've had no recent recession when everybody was thinking we would have one. The US dollar is higher. The stock market is higher. These are all things that are antithetical to a rising gold price. And so I think for those who said, well, I'm not going to invest in gold or gold stocks or whatever until the Fed lowers rates or until the US dollar crashes or whatever, those investors that have unfortunately missed out, because you don't want to be looking at one part of the elephant. Gold can respond to many different things. There's many factors and variables involved. And so it's uncertain times. You want to be long gold, make sure you own enough and have enough exposure to mining stocks in case they keep going, which is what's happening now.
Right. And okay, with that idea in mind that gold can respond to so many different factors, I will ask you what you see coming from the Fed in 2024, just because I'm curious, and it is one of the things that we usually discuss when it comes to gold. So what do you think we'll get from the Fed moving into the end of the year?
Yeah, I hate that we have to talk about them.
I'm so sorry.
No, it's like you. I just, we have to talk about them, but I just don't like that we have to talk about them because they do impact markets, but they're really a marketing machine. That's what really they are. And forward guidance is one of their mandates, just talking and saying what they might do, and look how that's worked out so far this year. They've seesawed back and forth on this, when we're going to lower rates, how many times we're going to lower rates, are we going to lower rates at all? This keeps going back and forth. And so to be honest with you, Charlotte, I don't give a lot of time to it and what they're saying and doing. They do impact markets, so I do watch it, and I think active investors should pay attention to it. But you know what? My portfolio is prepared for whatever they may do. I love what the Greek philosopher Pericles said. Don't try to predict, just prepare. And some may say, well, how am I going to prepare if I don't know what's coming? Exactly. You have to prepare for that. You have to be prepared for uncertainty. So I think what that means is you have to watch, you have to own enough gold, and for gold stocks, mining stocks, which is what I specialize in and spend a lot of my time doing and own a lot of. I own them, but I also have a cash buffer in case there is some sort of crash that takes them back down further again. So I got a little off track with you there, but that's kind of how I approach all of this with the Fed and the inflation numbers and all of that. The CPI is not inflation. It's a CPI. It doesn't necessarily measure what's really happening out in the real world. It's embarrassing when the Fed and politicians say that inflation's low. We all know it's not low, so I don't spend a lot of time on that. I watch it, but it's not a priority for how I invest.
Right. And I think you've explained this before, but probably it bears repeating. So when we talk about owning enough gold, that's kind of a tricky word. So for you, what does enough mean?
Well, there was actually a study done on how much gold you should own. How much gold should you own before it becomes too much versus not having enough to make a material impact on your portfolio. And there was a study done by CPM Group, went way back to the 70s, and they just tracked it. And they came out with a roughly 20% figure, between 20 and 25%. But 20% was kind of the bottom for the amount of gold one should own to balance risk and reward in their portfolio over a long period of time. Now, for some investors, that's going to sound like a lot. Well, if it is a lot to you, I would suggest that maybe you do need to own a lot right now. You need to be a little overweight. I think 20% is a real figure. That percentage in your portfolio will go down if you own mining stocks, and we're right about where mining stocks are going. They will gain greater than gold. So the percentage of your portfolio will go down. But I would look at it right now, especially if you're in the juniors when they're still low and depressed, and see if you can get to 20%. I think that's a reasonable figure. Until we have an honest and sound monetary system, I got to own 20%.
Okay. Thank you for going into that. I think that makes a lot of sense in today's environment. And I know you've been talking about how, you have to prepare without not necessarily knowing what's coming. But if we look at the gold price heading into the rest of this year, so during our January conversation, I think you had kind of said, 21, 22, 2300 gold is going to get through there. We could even go to 2500 possibly this year. So seeing though as it's moved so fast, have you made any adjustments to your thinking?
Yeah, that's a good question because we've obviously blown through all those levels, and the next target or level is 2500. I do think we'll get to that this year because history tells me we will. We've had a 38% rise in the gold price at this upcycle, if you will. But the average upcycle is much higher. And if this upcycle were to end now, it would be the lowest in history. So I'm forced to believe because of history that this trend is going higher. So I do put a lot of, let's say I have a high confidence level that gold is going to breach the $2,500 level this year.
I think it's definitely sounding more and more reasonable. So we'll keep an eye and see if that happens. I think on that note, your recent Metals Investor Forum presentation, you have a slide that I really liked, and I believe it was looking at pullbacks during the 2001 to 2011 gold bull market. And I thought that could be important to go into just to give some context on how it can look. Even when we're going up, we can go also back.
Yes, it's basically a 2 steps forward, 1 step back price behavior in the middle of a bull market. And yes, that slide's great. I love it. I love showing it to people because it reminds you that, hey, even in a bull market, even in the middle of a surge or a spike, there's going to be pullbacks. From 2001 to 2011, that bull market, there were 20 corrections during that time. So that's basically 2 a year almost, right? And the average correction in the gold price during that time was 12%, believe it or not. If you take out the 2008 crash, it was still 10%. So, this current correction going from 2,400 down to 2,300, that's not a 12% correction. It could go much more and still be a bull market. So I think if investors realize that, oh, okay, let's say we have, a 5-year bull market, that means there's going to be, based on history, 10 corrections. And that's perfectly normal. That's happened before. Even in the other slide, Charlotte, I showed one from just the 1979 mania. And even during that one, there were 7 corrections. Yes, no, 2, 4, 6, 7. Yeah, 7 corrections of 6% or more. The average was 10.7%. During a mania, that was a runaway bull market, right? In 1979, it was a parabolic rise. In the middle of that, there were still 7 corrections of 6% or more. So you have to expect that that's going to happen, but you could use that to your advantage. When you see a big correction in the middle of a bull market, that can be an opportunity. If you want to buy more gold, if you missed a mining stock before, those kind of things. So I think having the correct expectation about how a bull market behaves can be very useful.
I always find those historical data points really useful for feeling situated in what's going on. So really good to go over. And before we move on to talking maybe more about the equities, I want to ask you about silver. So we have silver also on the move now, finally. And I'm wondering what you see going on there. Is it following gold? Is there something else going on? What are your thoughts?
Well, silver is following gold, but it's actually outperforming gold like it usually does, right? It's a smaller market. It's going to be more volatile on the downside, but also on the upside, which is what we've been seeing now. I just ran this, Charlotte, yesterday. Gold is up since that February 29th date that I mentioned earlier. Gold is up 15.5%. Silver is up 40.7%. So silver is clearly, and the mining stocks, by the way, are up even more than that. But silver is clearly outperforming gold, and that's typical. That's what it usually does. So I think that's going to continue. So if we're right about the gold bull market, the uptrend continuing, then we should expect silver to do that as well, and to continue to outperform gold. So I think it's reasonable to expect, because you're probably going to ask me where I think silver is going. I think, the anywhere between the $40 and $50 range in this current, bull run is reasonable to expect, again, based on history. And then ultimately, I think silver is going higher than that. Its inflation adjusted price, by the way, is right around $75 using the CPI. If you use John Williams shadow stats, it's triple digits. But $75 silver, on a 2 to 3 year time frame is, I think, reasonable to expect.
Okay, thank you for going into that as well. And all right, so if we look at the junior research sector in general, when we had talked previously, you spoke about 2023 being perhaps the worst year for sentiment ever, and us bottoming out around that time. So how does sentiment look, or I guess to what extent has it improved this year? What are you seeing?
Well, I think, as any junior mining stock investor knows, it still hasn't improved all that much. But I will point out, GDX and GDXJ have both outperformed gold since that February 29th date I've mentioned. So mining stocks are carrying leverage as a group, but that doesn't mean, of course, every single stock is. And many of the juniors, let's say, that maybe aren't in the GDXJ are underperforming right now. They're still not moving, and so that's still ahead. But I think the fuse has been lit, because once gold starts to move, then the money will move down into the producers, then developers, and then the juniors. That's very typical. We've seen that happen throughout history, and so that does mean the fuse has been lit. We can expect within whatever the period of time is, that money will move down into the juniors and begin to shift. We've seen a shift almost in the gold price, that the sentiment in gold price. So next will be the minors, and then at the end of that will be the juniors. And you know what? Given how depressed they are, oh my gosh, we could see some really big gainers before this is all over.
Okay, I think that that helps. One thing I wanted to ask, so we've talked about prices for gold and silver, what's going on in those markets. We've talked a little bit about the equities. Are there any other trends that you're watching among the companies right now, things that you are paying close attention to?
You know what, Charlotte? I am laser focused on mining stocks right now. So I'm watching those because I know that some of those can move if they make a discovery, regardless of what the market did. You know, Snowline Gold was a 10x stock for us in 2022. Last year, Hercules Silver was a 10x stock for us. So who's it going to be this year? It doesn't require the gold and silver move. It requires something that the company is doing that is outside of what, you know, a lot of other companies might be doing. They're making a discovery. They're significantly expanding their deposit. They're going into production, you know, those kind of things. So I'm watching that. And then I'm watching other metals as well. Gold and silver, definitely. And then also watching copper. And I'm also watching lithium. And then, of course, we have a big allocation to uranium right now. That's a bull market that's happening right now. So I think investors who are, if you're a mining stock speculator, you want to have exposure to um, the uranium plays. And a lot of those have moved. We've actually taken profits in a lot of them, but there are new companies coming along that are just getting started that, you know, I think could be good bets. So not all of them, but I think there are a select few out there that I'm personally betting on.
Okay, that's really interesting. And of course, when I talk to you, I think I really always focus on gold and silver, but of course, there's other things going on. And we do talk about uranium on our channel, and I've found that it's calmed down a little bit over the past 2 months. People have been more interested in gold, silver, copper. So maybe for resource investors, there's something to say in there about keeping an eye on the broad spectrum. And okay, gold is really hot right now. Maybe you're looking at uranium, and you can get into something there. Any thoughts you might share there?
Yeah, that's true. It has pulled back a little bit, but this is a bull market uranium that's going to last for, you know, who knows how long, but I would guess, you know, 2 to 3 years because of a supply demand issue, because of politics, especially with Russia, because of the green energy movement. You've had most politicians and environmentalists do a complete 180 on uranium. They hated it 3 years ago. Now they love it and are even throwing money at it. So this is going to run. This is not fully played out yet. So you do want some exposure to those plays. And again, if something's run up a lot, well, there's other stocks that you can get into that haven't run up a lot yet. We're still speculating, but I think given the backdrop of the fact that this is a bull market and it's going to run for a while, you know, having a basket of these speculations might just pay off really well.
All right. And, as we start to wrap up, I want to make sure that I touch on some recent news for you. So Gwen Preston, I think many of our listeners will know Gwen from Resource Maven, and she's recently moved on from her newsletter to a new opportunity. And you will be, I believe, taking over her newsletter. So I'm wondering if you can tell me a little bit about that transition, what we should know.
Yes, thank you. So we always talk about M&A in the mining sector, right? And how that can really kind of get things rolling, right? Well, now we have M&A in the newsletter sector. So yes, we did purchase Gwen's paid newsletter, the Resource Maven. Um, Love Gwen. She's been great for our industry. We'll certainly miss her. I'm going to try and, you know, mimic and follow a lot of the things that she used to do. The only thing I won't do is I won't put a dress on, so you can't expect me to do that, Charlotte. But yeah, we're in the middle of that transition right now. So you can sign up on the Resource Maven side or the Paydirt Prospector, which is the Gold Advisor side. It doesn't matter, but that'll all be merged. And in other good news, Peter Krauth of the Silver Stock Investor, who worked with Gwen, is also coming over to the Gold Advisor. So the business is swelling rapidly. We're scrambling every day to get it all done, and we're still in the middle of that transition. But by the end of June, that will be done. And uh, so if you sign up on the Maven site, actually, you can look at Paydirt Prospector for free and get a free digital download of the book Paydirt if you want. And then everything begins anew in July. So we're excited. Gwen had some really good picks in her portfolio, but we staffed her portfolio, by the way, went through every pick, during this transition about who's going to come over. Took like 3 hours to go through everything, but I have to be honest, there were at least a third of her picks that, in my humble opinion, did not pass the criteria for what I would look for, and therefore they will not come over into Paydirt Prospector. So we're being a little stingy. I just want best of best. That's all I want. And it has to be, or it will be, with the criteria that I use in the book Paydirt. So, but exciting days ahead. There's a lot of picks for people to choose from there to create their own basket. It's pretty exciting. And hey, I think right time, right asset, right? I think we're in the right place at the right time. And the next 2 to 3 years, we're all going to be very happy.
Okay, that's really interesting to get a look at kind of the mechanics of, as you say, that newsletter M&A. So really interesting. Hopefully people will check out what you're doing there. And just before I let you go, I'll ask you if you have any final advice or words that you would leave investors with. I know in one of our conversations toward the beginning of the year, you had told me you're waiting, for a phone call from a certain actress, and this is when we would know the top is in. And it sounds, I think we're still far from that.
Oh, heck yeah. Yeah. The joke was that Jennifer Aniston, who my brother thinks is the most beautiful woman in the world, when she calls somebody that looks like this, she reaches that far down that would be the top of the market. Well, Jennifer Aniston has not called, and I promise I will let you know when she does. But yeah, we're a long way from this. We're really just getting started.
Okay, I think that's a great place to wrap it up. So I'll let you go for now, but of course, we'll be checking in later in the year to find out what's going on. So thank you so much for this interview.
This was great, Charlotte. Thanks for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Jeff Clark with Paydirt Prospector. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.